Hi, I'm John Pasalis, and this is the Move Smartly Show. On today's episode, we have our monthly real estate roundtable with myself and Steve Saretsky, and as always, Urmi Desai asking us questions about the latest trends in the housing markets in Toronto, Vancouver, and of course, national housing issues. This month, we're discussing the federal government's changes to their immigration targets and a lot of announcements and suggestions that maybe if governments scale back taxes on new housing, this might drive more sales in the future. We unpack all of these ideas on this month's episode. As always, if you have any questions, you can always reach out to me at askjohn@movesmartly.com. And now on to today's show.
Hi, well, welcome to November, guys. Nice to see you again. Steve out in Vancouver. How are you doing?
Good to be back. Yeah, we're back in the swing of things. Pretty busy, which I'm sure we'll get into it.
Yeah, John, I think things are picking up a bit in Toronto as well.
Definitely seeing on the ground, seeing in the data. Yeah, definitely things have picked up a little bit.
This is the
Interesting.
pumper
And
show.
yeah, as at the time of taping, we're having a strange weather bounce here in Toronto as well, hitting 20 degrees. So who knows what's going on. So let's jump into the fuller market update. Steve, why don't we start with you out in Vancouver? You say things are picking up. Is that in terms of, what's it looking like on the ground and how does it feel and what data indicators are moving first?
Yeah, I mean, it's really just like a factor of activity levels have increased rather significantly. So if you look at sales, so sales, yeah, they're quite low last year, but they bounced 32%, 32% on a year-over-year basis in the month of October. Still slightly below like long-term averages, but it's a noticeable bounce. Um, New listings were still elevated, but months of inventory came off quite a bit, pretty much across the board. So like what we basically like to summarize it, like basically what we've seen all of a sudden like a lot of the inventory that was kind of stagnant, maybe it was sitting on the market for 6, 7 weeks, like all of a sudden it was just, getting a whole bunch of showings, the phone started ringing and they're under contract. We started seeing even some stale inventory that suddenly goes into multiple offers after being on the market for 5 weeks. So like, things of that nature. Again, I'm not saying it's multiple offers, like you've got these bidding nights and there's four offers coming in. No, it's like, hey, you know what? There's two offers on the table and it sells 10K below asking price. So it's nothing crazy, but it's just a noticeable uptick from like what was like a really slow, kind of dead market to all of a sudden, hey, we're getting a whole bunch of showings on these. All these inquiries are coming through, and the stale inventory is now moving.
And so are you seeing months of inventory coming down?
Yeah, we've seen months of inventory come down pretty much across the board. So months of inventory for all product types, we moved from, I think it was about 8 months to about, yeah, we moved from 8 to 5. So it's a noticeable drop in one single month. So that's what I'm saying. Like it's been a noticeable shift in just basically 4 weeks. I don't think 1 month is necessarily a trend, but I think it's worth noting, right? I mean, we know the rate cuts, we know that they've played out, and we know they've happened. People have said, well, it's going to get people off the sidelines. It looks like it has. We'll see if it continues. So I think it's just important to note.
But you're saying it's not showing in prices increasing. Are prices down from this time last year?
Yeah, I mean the price, I mean it's so hard to analyze prices on like a month to month basis, right? I mean there's seasonal fluctuations as well. Like, if you look at the home price index across all property types, it's down 1.9% from last year.
Okay.
Slightly down from last month, but like, but then the median home price ticked up. So like basically what I tell you is this, from my experience transacting stuff, like when the market starts to shift, so what we're seeing now is the market is it's shifting, activity is increasing, and when the activity increases and all of a sudden you go from like no showings on your properties to like 5 or 6 showings a week, you lose as the buyer, you lose a lot of the ability to go and aggressively negotiate. You lose some of the leverage in the negotiations, which is like, hey, the market's, like 2, 3, 4, 6 months ago, everyone's like, hey, the market's going to get worse. Like, I want a low price. I'm going to lowball you because, like, I think we can all agree consensus is prices are going to move lower. Today, the sentiment is starting to shift where it's like, hey, guys, rate cuts are here. Market's clearly picking up. Things are probably maybe could look a lot better in the spring. And so you just like from a sentiment perspective, like negotiations, it's all psychological. And if people feel things are going to improve, you lose some of that ability to chip away at the price. And so I think that's what you're seeing today.
Thanks. And John, I think you were noticing a similar trend in Toronto. Your latest video was talking about months in inventory as well, being one of the early indicators that things might be changing in Toronto.
Yeah, very similar dynamics. We've been seeing this, over the past 5 or 6 weeks or so, the market shift. When months of inventory falls, it generally means that sales are outpacing new listings effectively, right? So some of those sales are taking up some of the stale listings, as Steve said, and that's what we've seen. So in the Toronto market, sales for houses are up, I think, around 45%. Sales for condos up 30-ish%. Again, like Steve said, much very similar here. Those are off of very low numbers last year. Last year was something like 20-year low in sales. So yeah, we're still below longer term averages, but it's definitely a bounce back. We're seeing more buyers jump in. Definitely not reflected in prices. The market's still slow, and I think the one thing I would want to get across, like, when at least when we're talking about the market picking up, it doesn't mean everything's crazy, right? Like we went from a market that was moving at like 30 kilometers per hour to a market that's moving at 40 kilometers per hour. It's like
You're on the
inching up.
You're on the Don Valley Parkway and it's finally
Exactly.
moving a little
Yeah,
more.
exactly. Right. So it's not ripping, it's not a crazy market. It's just a little busier. Condos went from think 6.5 months of inventory to about 5 months of inventory. So it's still a slow market, right? Not as slow as it was a couple of months ago. Houses went from about 4.5 to 3 months of inventory. Again, like these kind of ranges are flat price ranges generally. But again, we're gonna have to see how that evolves over the next couple of months. And I'd say the sentiment has shifted a lot. We met so many clients over the past couple of weeks. The buyers we're meeting with have one general concern. They feel like they need to buy now because they're worried the market's going to be extremely busy in the spring and prices are going to surge and they're going to be priced out. And I don't make predictions about the market. My feeling is, and I try to tell people, like, I would not worry too much about like prices skyrocketing. Like, I do think the market will be busier in the new year. I don't think prices are going to be going up 10% in 2 months. I could be wrong, but I would be surprised if that happens. If that happens, it's like inventory, like new listings has got to be at 20-year lows. You know what I mean? So if new listings volumes are kind of normal, the demand should be also somewhat normal. So we should have a pretty balanced market. But again, I think the buyers that we see that are jumping in are jumping in because they feel like, again, not just that the market's going to be busier, but they want to take advantage of a market today where buyers are buying homes with conditions on home inspection, conditions on financing, and can negotiate on the price. Something that is not very typical in the Toronto area, where even in a somewhat normal market, homes sell quickly. And that doesn't mean every home gets multiple offers, but homes sell quickly, and it's a little bit more of a high pressure market. So I think some buyers just feel like now's the time to take advantage of how cool the market is, to get some value, and that's kind of what we're seeing on the ground.
Interesting. And both of you touched on interest rates. So we saw a 50%, a 50 basis point cut. So the policy rate is now at 3.75%. Do you think that's a big factor in why you're starting to see this activity, or do you think there's something else at
I
play?
think there's some sentiments to that. I think, like, again, like, I don't think the bank's going to cut again in December. They'll cut in whatever it is, January. Rates will eventually, I think people see that rates will be lower in the new year, and I do think that's part of what's pulling people in. I think part of the perception is like rates will be lower. We're gonna have new mortgage rule changes in the new year. the market overall will be busier. Let's get ahead before all of this stuff happens, right? And I think what I'm telling people is, listen, yeah, rates will be lower, variable rates will be a fair bit lower, but overall, the interest rate that people are paying on their mortgage, which is probably going to be fixed, in the future, it's not going to be that much lower. Like we might hit high threes rather than low to mid fours. You know what I mean? So it's not like we're going down to 2% tomorrow. So, that's why I don't think it's going to be an insane market because you're just going to still have mortgage interest rates in the four-ish range, plus or minus, I think. And I don't think that's like an environment where people are, 20 offers on homes.
I,
But
I think that's a
Steve.
good point, John. Which is, I think that, obviously you and I put on the show every month and we go to these housing events and John, you and I were presenting to these big bank, hedge funds and people that really understand like the bond market and yields and what's priced in, what's not priced in. It's like the average homeowner, the average person that's just shopping for like a condo or like an entry level house, like they don't they don't follow that. They just read like in the Globe and Mail that the Bank of Canada cut 50 basis points and they just assume that, well, shouldn't my mortgage rate drop? Like the amount of people that I chatted with, and when I chat with my lenders, they're like, "Yeah, you should hear the conversation I had today." Is the Bank of Canada cut 50, and they were asking me why I wasn't cutting my fixed rate by 50 basis points on my rate hold. And it's like, well, so like I think the challenge is like you have to look at this outside of just the show, which is like how does the average Canadian think and understand rates? And I think what they do is they read headlines, right? They read that rates are coming down from the Bank of Canada, not necessarily realizing that your fixed rate mortgages might not move. But I think it already has done the move in advance, which is to say that, most clients today are getting what, 4.2, 4.3, kind of in that range. What is it? 18 months ago, we were talking about 6.2, 6.3. So, I mean, it's been a substantial relief. I mean, I think low fours, it's higher than what people are used to, but I mean, I don't really think it's that high. Um, and so I think the market has moved in advance of that. It's helped free up some ability to borrow more money. And that combined with the psychological impact of what people are hearing and reading about, which is the Bank of Canada is cutting rates and they're going to continue to cut rates.
So if you're a buyer on the sideline, the reason why you're feeling a little bit scared again is because that's been the narrative. Like
Mhm.
after 2008, everything came to a standstill, and all of a sudden we saw prices take off. That was one of the biggest jumps after, the subprime sort of settled down. Canadian home prices just shot up. It was one of our spikes. And then same thing with COVID. First, there was an additional, like this initial shutdown of the market. And then we saw one of the biggest spikes happen in prices, in the middle of a COVID pandemic. So I think that's what scares buyers. Like, I can totally relate to that feeling like, here we go again. But the
Mhm.
difference you're saying in those two environments were very low interest rates. So is that the difference this time and why you think any spike would not be as, strong or in prices?
I think to some extent, yeah, because like we said, we're going to be close to the fours. And I agree with Steve. Like that's not high necessarily, but it's higher than what people are used to. It's higher than what got prices to today's level, right? We got to think about that. Like, prices have fallen from the peak, but they're still well above where they historically would have been when rates are in the 4% range, right? And I do think that's partly why I'd be surprised if we have this crazy rally. And like I said, if we do have it, it would be it would be like the rally we saw in 2023. 2023. Yeah, it's 2023 when the banks signaled they're pausing and rates were in the fours and everyone rushed in. And even though demand levels were kind of normalish, prices accelerated because new listings were at a 20-year low, right? So I think that would be the scenario where maybe prices increase because I think demand will be higher. I don't think it's going to be like record highs. We don't know what's going to happen to new listings. So if new listings are normal-ish, then I suspect it should be pretty balanced.
And just to add to that point, right? It's like if you get So, like if you assume, your fixed rates stay or call it 4.2, 4.3, and let's just say they fall a bit more. Let's just say they're 50 basis points lower, next year. So you're borrowing at 3.8. It's not bad, but like 3.8 still for a lot of investors is not really going to make the math work. Like if you're going to go out there and buy a condo to rent out, which was a huge driver of demand over the last 4 or 5 years, 3.8 is a lot different than 2.3, you know? And so I just don't think that math is really going to work. And I look at it and say, not only that, but you've got like a record number of condos completing. You've got really high inventory levels today. You've got rents declining in those major markets, in the GTA and in Vancouver. The feds have just announced that, population growth is going to go to zero. So I don't know. I think as an investor, I'm still struggling to think like they're really going to be roaring back into the market that's going to drive that segment higher. I think where you're seeing the activity levels increase today and sort of normalize is really in that end user market, right? So if you've got an entry level house, if you've got, a 3 bedroom townhouse where all these sort of young millennials are trying to sort of squeeze into the housing market, that market to me still is dramatically better than, the dog crate condo market.
Yeah. So, and that was going to be my question. The investor side of things, it was a huge aspect of those spikes that I mentioned, right? In the past. And is that segment not fully engaged in, and if not, then we would see more moderate price growth, if any.
I think there are, I mean, I think there are still some investors out there buying. I think there's
For
still
sure.
some very bullish people. Like,
Mm.
so when we talk about like investor bids gone, I think I mean, at least I generally mean like compared to the insanity of before. Like, there's always some investors. There are 100% investors buying condos today, some reconstruction, some resale. You know what I mean? There are still some very bullish people. But yeah, I suspect that that bid's largely a fraction of what it was, especially in the condo market. And it's going to be gone for the new condo market for years, probably.
And John, in that on that side, I'm seeing some headlines talking about how distress in that new condo market or people trying to close or needing to deleverage or just get some investments off their book is still a trend that is expected to get bigger in the
Yeah.
Toronto area. How do you think that plays into it? Now, does that contribute to a listing surge, for example, that then impacts prices or keeps increases lower?
I mean, it's tough to say because the listings, sir, I mean, A, can the people even close on their condos, right? Um, and if they can't, then the condo's going to have issues. I suspect what's happening now, and I'm hearing more of, is you have like these, I don't know, like larger, well capitalized, investors, say, who are probably just going in and trying to take over some assignments at a significant discount, right? From what sort of the pre-con investor paid to release them from it, um, and buying kind of a bunch of units. So if that continues, then the project will be sold and you're not going to see a ton of distress, right? So that's what I mean. It really depends. It's hard to say how it all plays out, because if there are enough people, obviously kind of like vulture investors is kind of what they are. You know what I mean? Like they're taking advantage of a distressed situation, making the original buyer take a massive haircut, losing their deposit, maybe losing another 100 grand just to get out of the deal, to avoid being sued and having all these problems. Yeah, maybe you don't see many issues. Maybe they close and, if you have a lot of inventory, maybe it just hits on the rental market. We see some downward pressure on rents. So we don't know personally. It's hard to say how that's going to play out.
Mm. And Steve, the pre-con sector is smaller in Vancouver, but are you seeing some of the same stories or still that question of how many people might be in trouble?
Yeah, I mean, I'm gonna be honest, like I don't think the pre-con space, the troubles that we have here are even remotely close to what's going on in the GTA. I think the GTA is like on an entirely different level. I think there are definitely issues here. I think it's gonna be a market that struggles for the next few years. Um, yeah, I just don't think we have the same level. Just that we don't have the sheer volume of condos that are under construction, and I think just the malinvestment that was happening there. But there's definitely some really extreme examples. I think what we're seeing now is like some of these towers that have completed, in pockets like Brentwood or Surrey Central, where like these new sort of communities have been forming up with these concrete towers going up everywhere. Is you're seeing that they're completing, and in a high rise you get 40, 50 units that are active on the market. So you have all these investors basically looking for liquidity, and they're not finding any liquidity. And part of that reason is because they say, well, okay, I bought this thing 5 years ago at the presentation center for $600,000. I then closed on it, paid GST, transfer tax. Now I got to pay a realtor fee. I'm willing to maybe resell it at the same price I paid, which is 600K. Net of all my fees, I'm going to be losing, 75 grand. I'm not willing to lose any more than that. So they just kind of sit there and they linger. But like, what it might take to clear is, instead of selling it at 600, you might have to sell it for 550 plus lose all your fees and your taxes that you paid. So like, but I think what you see is like all these units just stagnate on that market because the vast majority of these sellers are just digging in their heels. And I guess it's a matter of just, it's like a battle of attrition, right? Which is, how long are they going to be able to hold out? I suspect that maybe next year they'll, some of them will start releasing these units at 550. It's possible.
And before moving on, I wonder if you guys could talk a little bit about the interplay between these segments. So generally, we would think investors are heavily involved in the pre-con sector. If we do see prices start to fall in that sector, how does that affect the resale, let's say condo, and then what happens, to the end user market? Do you see people, as would they start substituting again? For example, bigger condos for homes? Like what happens to demand in that end user segment if we see, let's say, some deals start to show up on the pre-con or just finished side?
I mean, I can like so the pre-con space is kind of hard to see deals because at least the way it stands today, the builder bought the land, set up their project, has their plans, assuming a certain price that they need to sell to take on the risk, to take on the project. And if they can't get that, they're just not going to sell it, and they're just going to wait for the markets to recover and for them to get the price they want. The only way that they could, reduce the price is effectively if their costs decrease, either construction costs dip, taxes, there's some changes to taxes or whatever that allows them to drop the price on the pre-construction, to offer more of an incentive to buyers to actually purchase them. So I don't think we're going to see tons of deals on pre-con
Yeah, and maybe
because
I'm
it's,
misspeaking. What
yeah.
about the just completed, the new listings coming online? So
Oh,
the
yeah.
record completions, and so they're selling and they're hitting the resale market for the first time.
They might. I mean, at the end of the day, it's going to be tough because if they're sell, I mean, again, are they going to sell for deals? And I think this is the important thing to understand. Just because they bought it for 1,700 bucks a square foot and they're trying to sell it now for 1,300, which is a big haircut, it doesn't mean it's a deal. It just means 1,300 per square foot is what it's worth in today's resale market, right? So I don't think it's going to be like massive deals. They're going to be selling for market prices for that type of unit in this environment. And if that is 30% less than what they paid for it, it just means they overpaid for it when they bought it, or the market did not go to where they were hoping it was going to go to, right? And yeah, maybe you might see good value in there as an end user because it's a new unit, it's a nicer, you know what I mean? But I don't think it's going to be a deal in a traditional sense where it's like way below market value.
Are you seeing a lot of examples where you go from like, hey, this person bought for 17 and they caught a bid at 1,300 a foot on the resale market? Is that like a fairly common occurrence with this new construction, or is this kind of like more of the aggressive sort of one-off that you see here and there that kind of make Twitter?
So I think up until now, like the discount hasn't been as big. Like I think like at the higher end, maybe some of the buildings that are completed are worth like 20% less than what investors paid for them. And
Mhm.
that's the situation where banks are turning a blind eye, doing blanket appraisals, kind of, going forward. But when we look at the pipeline, like everyone I talk to says it's going to get worse. Like everyone that sort of really looks at the pre-con space, they said that as we move forward into 2025 and even 2026, the difference between what investors paid and resale prices is going to be a lot bigger. And those are the ones where, yeah, you might see bought at 1,700 square foot, only worth 1,300 a square foot in today's market. Um, and I don't know how they're going to close. And I think that's where you're going to see some challenges with some of these pre-con
We got some
investors.
of the extreme ones in like downtown Vancouver, like yeah, were that closed recently, closed last summer actually, like 2,600 a foot.
Wow.
People trying to sell like 2,200 a foot, but like there's still no bid. Um, but there's projects that are going to be completing in the next probably 3-4 months at 3,000 a foot. And I'm like,
Wow.
what are those clear at? Are those clearing at 2,000 a foot? Because that's probably more the number. But I'd be curious, right? It's more just like it's like think about that though, right? Who wants to be the first one to like materialize that loss, right? Of like, okay, I paid three, I'm gonna take two. Like chances are, like when you close, you're gonna relist back at that three and you're gonna sit there for 6 months before you realize like the market is at two. Or you know what I mean? Or people end up, I think there's a whole cohort out there that are just like, I can't stomach a loss. I can't materialize this loss of $1,000 a foot. I'd rather just hope, hold on, rent it out, lose $1,200 a month in rent, and hope that the market's better in 2 years from now. Do you know what I mean? So there's a huge cohort of people that are doing that too. And I'm not saying that's the right strategy, but people are just trying to figure it out. I think we've talked about it at the beginning of the show. I mean, we talk about like a market that's like recovering. And I think it's really important to distinguish that like it's recovering in segments of the market and that in particularly the end user resale market, but we get all the big sort of issues, or I think it's a crisis, is really in the new construction market for a lot of these high rise concrete towers that people overpaid for near the peak of the market. And yeah, there's more problems there.
All right. So let's say short term, I'm hearing that, prices will probably stay flat. It's not going to be enough to see price drops, even if we see, for example, a surge in listings. The other problem too is that condo listings that come onto the market, they're not, always the end product that everyone's looking for, right? We still see that pressure for the single family homes, people trying to get their families into bigger places. So let's move now to longer term for what might make things more affordable. Some recent government moves and some pledges, I guess, and other things that are making the headlines. And I'm wondering where you think they will take us when it comes to affordability. So let's start with the Liberals' cut to immigration numbers. Steve, you talked about people projecting that this may be flat growth, results in no growth in population after a stunning increase leading the G8. So, what would that mean? What would you expect if that cut takes place and we do see our population growth level off? How will it impact affordability,
Yeah.
house
I mean,
prices?
I think like, yeah, I mean, friend of the show, Ben Rabideau, who's got way more of a handle on this than I do. But I mean, I think there's a lot of big ifs here, right? Is this going to be the government that's in power 6 to 9 months from now? Is number one. I think number two is I think part of the projections is like, population growth will actually contract 0.2%. I mean, that's on the assumption that I think what is it, 900,000 temporary non-permanent residents will actually just leave the country. Are they actually going to leave or some of them going to stay illegally? So like there's a lot of like ifs, ands, buts, but they're going to go into different channels like asylum seekers. I heard that's a big one that's kind of popping up now. So, but I mean, let's just assume that the numbers are in fact correct and population growth effectively goes to zero. I mean, I think that we've already got rents that are declining in Vancouver and in the GTA. So, and we've got a record number of condos that are completing over the next 12 to 18 months. I have to think that that's not very bullish for rents. It's probably not very bullish for the pre-construction market where we've already said there's real problems. And so I just think it just kind of exacerbates that. I think on the flip side, you go, well, that seems kind of disinflationary. I mean, that's probably a good argument to be made that maybe rates are going lower than we think because I mean, RBC thinks you're gonna shave off 1% on GDP growth. I mean, that doesn't sound very bullish for rates either. So, yeah, I mean, I think there's a whole bunch of scenarios that could play out here. But John, you would know. I mean, every real estate developer's pitch at the presentation center is, "Oh, Canada's population, it's growing like crazy. You got to buy. Prices are going to keep going up." Well, it's like, well, hold on a minute. If we're going to zero, I mean,
Yeah.
what's the sales pitch now?
Housing shortage.
We
Yeah.
don't we don't have enough for whoever is already here.
Yeah, basically, that's what they can be saying. But obviously, I mean, if you have zero growth, and I mean, and to unpack that a little bit, and I think the bigger number for listeners who aren't that familiar with it isn't so much the liberals cut to immigration. I mean, they cut it from say 500,000 to just under 400,000. So our permanent residents are still growing by 400,000. But our non-permanent residents are actually declining by, let's just say, 400,000, which means there's zero growth, right? And that is obviously a huge difference from growing by 1.3 million people per year, which was our most recent sort of numbers. So a dramatic turn. And I tend to agree with Steve. I mean, the impact on the market, I suspect, is more likely going to be felt on the rental market. Because permanent residents are still growing by close to 400,000 people per year. We're only building 200-ish thousand homes. But the decline in non-permanent residents is likely going, non-permanent residents are more likely to be renters. That's just the reality, right? Many of them are students renting rooming houses in the outer suburbs. Those investors are going to get killed. Like there's just going to be no demand or not as much demand for being a slumlord renting, 10 room. I mean, I think call it. I mean, many of them are, let's be honest.
I'm not sure
Um,
anyone's that worried for that
yeah, exactly.
segment.
Um,
Was that one that went viral in Calgary? It was like the little bungalow that was like a 1,500 square foot bungalow, but it had 13 bedrooms.
oh
And
my
you're like, how's
God.
that work?
So yeah, probably taking some pressure off of rents, and maybe even some pressure off of home price appreciation. But again, as Steve said, we'll have to see if it plays out. If the liberals follow through, if the conservatives do it, if when they come in, I mean, I'm going to say when they come into power because I think everyone in the country
Bold,
just assumes
very
that's going to
bold,
happen.
John.
Um, I mean, let's be honest. A year from now, like I would actually be surprised if the conservatives moved away from that,
Mm.
right? So I suspect they would be sticking to that. I'd be surprised if a year from now, if they win, they start talking about ramping up population growth above what the liberals had promised. So I suspect we're going to see some version of that play out, but again, we'll have to see how that all kind of unfolds.
And sticking with the conservatives, Pierre Poilievre has announced some more of his platform for what the conservatives would do if they won the federal election. And one of the big ones is to cut federal GST on new homes up to 1 million. So I'm wondering what your reaction is to that kind of proposal. John, again, it seems like this is a demand fueler.
I think, well, demand for new construction housing, which is not a bad thing. I mean, at the end of the day, there is an exemption on HST. I think what's the limit? Like 450,000 or something like that. So I think on the first 450,000 that you buy on a new construction, they're like they kind of waive the GST. There is no GST, you just pay it on the difference. But that was set like a long freaking time ago when home prices were a lot more affordable. So that limit has not adjusted to today's market. So what the conservatives are saying effectively is, well, we need to revisit this, that limit on sort of where, on what point we're not charging HST and where we are starting to charge. And they've set it to 1 million. And yeah, that might stimulate more housing for low-rise homes and potentially even new construction. When we talked earlier about what stimulates demand for new construction housing, well, if you flow through cuts in taxes, I mean, especially in a sluggish market, builders are more likely to transfer those into lower costs today because they want to sell units. You know what I mean? So if you're doing that, now's the time to do it. Doing it when there were lineups of people ready to pay $1,800 a square foot and killing each other during 2022 would not have been the time to do it, because that just would have went straight into profits. Builders are not adjusting their prices in that environment, but they certainly are in today's environment because they don't want to sit on land. They want to sell units.
I mean, just to add to
Yeah.
that point, like I think like we just had an example of a listing that we just sold last week, which was like in today's environment, like, obviously you have to set policy for sort of today's environment or where the puck is going. I think in today's environment, new construction is just so far gone that like the numbers just make no sense. They cannot compete at all with resale. And people say, well, they should just lower their price. If you pull up one of these pro formas, I mean, the margins, there's not a lot of margin there to begin with. So they can't remain competitive in today's environment, right? I mean, we just talked about, John, right? Like new construction is going at 1,700 a foot, but the resale market's at 1,300 a foot. So it's like, okay, great. Even if you save some cost savings through construction costs somehow, some way, cities reduce their fees, developers take a slightly lower profit. Like the gap between what it costs to build new housing today and where the resale market is so big that, like, I think by trimming that 5% GST, it makes new housing slightly more competitive. So like I said, we just sold a listing last week where like buyer was looking at our townhouse. It was 2 years old, or they can buy a very similar townhouse, somewhat similar in price. The new one was slightly higher, but it also has the 5% GST on it. And so after some sort of humming and hawing, they decided to write on our place, and it sold. Because they're like, well, like it's 2 years old, it's basically brand new, but the sellers had already paid the GST. So there's 5% cost savings right in my pocket. So I know I just look at real like life examples of that, and my view is that this is not the be all end all. This is not the panacea to fix housing. But I think what it does is it should make new housing slightly more competitive. And when we're going into an environment where new housing supply is going to fall off a cliff over the next 24 months, it doesn't, regardless of where rates go over the next 12 months. I think it's timing wise good policy.
Interesting. So that was going to be my second question, because the great fear now is with new pre-con now just basically halting projects and not coming online. That's feeding into the supply gap that contributes to our long-term affordability problems. Is this going to be enough though, Steve? It sounds like you're saying this isn't really enough to
No,
to
no,
turn that around.
I think it makes the odd projects, maybe it makes the odd project economically viable once again. So but you're still going to get housing starts, obliterated over the next couple of years. I mean, I don't think there's a whole lot you can do to stem the tide on that. I just think it's inevitable that, yeah, new housing starts are going to roll off dramatically. And so you then have to wonder places like the GTA where, how many people are employed in that construction space. I think it is a crisis. I really do. I think it's, maybe not as talked about as much today, but I think we're going to be looking at it 12 months from now and going, oh, wow, that's
But
pretty
wait,
bad.
we are starting to hear about something to perhaps bring prices down even more. And that is this idea of looking at development charges that have
Mhm.
gone out of control. So looking at your Twitter, Steve, you were sharing a chart that's been widely circulated from Professor Mike Moffat. The dirty little secret is local governments are too afraid to raise property taxes, so they slap them on new development instead, where the average person doesn't notice. And Steve shows the development charges and property tax jump on a typical one-bedroom condo in the city of Toronto. So that's in the orange. For those of you viewing, we'll have links to this chart in our show notes for those of you listening. So, what is that? A 10-time increase?
That's crazy.
It's a tenfold increase in development charges from 2010 to September 2024. And this is in Toronto. So the argument being made here is that development charges, which are levied by municipalities, are one factor which can move quite a bit, even more so than HST or GST, for example, which is connected to the purchase price of a home. And the idea is that there's this argument between a broad-based taxation, you can levy property tax increases on everybody, or try and get more money out of people buying housing. And the argument is that the shift, instead of taking on the property tax increase battle, the shift has really gone, many argue disproportionately, to having developers pay more and more charges as they bring on new housing. So we actually had an extended interview with Matt Young from the Can't Win Coalition, who wants to see these fees reduced. Steve, what do you think overall about this controversy?
I mean, I'd be curious John's thoughts, but I mean, I was reading an article a couple weeks ago. So, John, in Toronto, the development charges for a single detached house has gone from $12,000 in 2010 to $141,000 in 2024. So it's a 993% increase over. It's just crazy. I mean, I'll tell you this from experience in Vancouver. Like, we tell all of our clients, like, do not build a single family house in Vancouver. Like, if you want to light money on fire, great. That's awesome. You want to build a custom home because you got the money and you don't really care about the cost, go for it. But like, it does not make sense to build new housing today with all of the costs, all of the permits, all of the headaches, all of the time that's involved. And then you end up with a completed product that isn't worth what you put into it. You're better off basically going and buying like a 7-year-old house that was built by some guy that put all his, blood, sweat, and tears into it, 7, 8, 9 years ago, than going through that headache. So yeah, I just think, and you can almost start to apply this across other segments where it just economically doesn't make sense to build new housing anymore. So I don't know how and when that's going to change, but then the math is just not there.
John?
Yeah, I mean, okay, 100%. I mean, development charges have gotten out of control. I think cities have seen them as it's effectively the city's way of profiting off of a booming housing market, right? They can do whatever they want. They can increase their taxes as much as they want. No one says anything. No one sees them because they're embedded in the price that people pay for units. And 100%, this was largely done to keep property taxes as low as possible for the people who are, quite frankly, benefiting from rising house prices. Okay. So 100% that they should be lower. I mean, listen, on the flip side, I have some problems with some of the narratives that some of these advocates are putting out. At the end of the day, I mean, 2 years ago, no one was blaming development charges for our housing crisis when investors were lining up paying $1,800 a square foot, right? No one was talking about that. They were talking about, oh, the problem is that housing's illegal in low-rise neighborhoods. Let's legalize fourplexes, right?
Yeah.
Zoning. That's what they're talking about. That was the problem in our housing crisis 2 years ago. They legalized fourplexes in Toronto, kind of didn't do anything. So now that construction has stopped, kind of the latest boogeyman that apparently has caused this stop is development charges, right? And I think that's misguided. I think at the end of the day, condo prices have skyrocketed. I mean, and partly because we had an investor-driven bubble in pre-construction. Like, I don't know what else to call it. Look at anyone who bought pre-construction. They were speculating. Many of them don't have the means to even close. And the problem I have with these narrative is that these economists and many of the people, these advocates blaming development charges, were the same people who were cheerleading investors driving our housing market. And I don't want to say investors are, we need investors in the housing market, but when you're very, very pro investors driving almost all of your new housing, you're kind of also effectively an advocate of a speculative housing bubble, which is kind of what happened, right? And that has happened in the US and during their housing bubble. It's happened in Dubai. That's not new. This isn't unique to Toronto, right? Like Dubai's market crash, Phoenix crash, Vegas crash. They all had housing, and now we're seeing sort of the aftershock of prices that were driven up by exuberance, quite frankly. Like you only pay 40% more for a pre-con condo than a resale one if you think prices go up forever. Like no rational person was doing that. Any person I know who had a CFA, a good degree, worked in finance, like, I don't know anybody who's buying pre-con condos, right? Like nobody was paying 40% more. So it's all driven by exuberance. And now we have those are the after effects of that, of an advocacy that was let's create a speculative bubble to fill our supply. And now we're trying to find the boogeyman that caused this. And it wasn't exuberance in a speculative bubble. Now we're just blaming development charges. And don't get me wrong, I'm not suggesting the development charges thing is we shouldn't do it. 100% municipalities should cut them. But this idea that this is why sales have halted, I mean, give me a break. I mean, I think there's so much more to it. And quite frankly, some of the own advocacy of these people who are blaming development charges kind of is what fueled the bubble. They were the biggest advocates of investor-driven bubble, quite frankly.
I mean, I think you're right. I think it's if I look at it from all angles, it's kind of like if I'm the city, like if I'm running the city today, I'm a mayor. It's like you see the writing on the wall for like where housing development is going over the next couple of years, and it's basically going to zero. And so I think you're better off to take, and which is like a huge chunk of your tax base, you're better off to take a little bit less. A little bit of something is better than nothing. And so I think one way to get projects off the ground and a shovel in the dirt is to take a little bit smaller, a little bit less of the pie. And so I think they're going to have to cut their development charges at least temporarily. Because
But
a little bit of something is better than nothing.
the cities are acting like builders. They're just like, screw it. I'm just going to wait for the market to hit the price I want. Eventually, those units will sell, and I'm going to
Well,
get the 50,000 per one bedroom condo I wanted. I mean, I think the biggest issue is you can't leave it to the cities. Like has to be driven by the province, right? Like if we're sitting around waiting for every municipality in Ontario and in BC to lower development charges, I mean, good luck,
Well, the
right?
argument also is that the province and the feds need to step up then and provide more infrastructure funding up front, right?
Mhm.
Because in some of this is municipalities playing catch up, maybe not in all cases, but
Yeah.
definitely in a lot. And we see a lot of deterioration in Toronto. The quality of our roads, our services, all the shared services, and that we've poured new housing on top of, the story hasn't gotten better.
Mhm.
Our congestion is terrible. Our traffic is awful. We literally have a highway that's half hanging in the sky, unfinished. One of our main arterial highways. Like it is a mess. We're starting to look like Gotham City a bit there.
tunnels,
Sorry?
tunnels.
Tunnel.
Tunnels. That's it.
Oh,
That's
don't
the
you
new
dare.
plan.
Don't you dare. Can you imagine? Oh, I'll be driving on the DVP and suddenly I'll be in a tunnel.
Get Elon's company. What is it?
Oh.
The boring
Oh
tunnels or
God.
whatever you
Yeah,
call
so
it.
unless we're going to have amazing new infrastructure techniques, the point is everybody's shifting the buck, right? Like they're saying, fine, step up with more money. And they actually, the mayor of Aurora and Newmarket, I believe, which is York Region, which is just north of Toronto, are pushing for a bigger cut of the HST that the feds and the province charge on new housing. So
Mhm.
there's another play, right? Fine, you guys are charging that. We need it. for infrastructure. So I think one of the arguments there is, who should pay. But I think what kind of happened when housing turned into a casino, it's almost like some governments decided, oh, this is like a vice tax. Like the amount you can
Yes,
tax alcohol and the amount you can
100%.
like these end user products that are just, or lottos, for
Yeah,
example,
that's what the
Um,
city did. You're right.
yeah. So the city kind of went in there and went, oh, this is almost like gambler's tax. Like, how high can we go before
Yeah,
anyone notices?
yeah.
And now people are noticing. So I suspect Steve's right, though. Overall, the cities probably will lower development charges.
I don't know if they
You
will.
don't think so?
No, I
Interesting.
mean, unless they're getting that money from somewhere. I think that's the
Right.
point. It's like
Yeah.
easy.
The
It's like,
problem
I
with this
just got it.
housing accelerator fund is everyone's conservatives are going to cancel the housing. So, but it hasn't proven it's turned into this, like, I think it was a really good idea, but in practicality or in reality, it's turning out to be like this tax heist where these municipals are just they're taking the housing accelerator funds and then they're jacking up their development cost charges anyways,
Yeah, I mean, you're
But
right.
here's
rendering
the
these
problem. But
projects
here's the
viable.
yeah.
They
But here's
should.
the
Uh,
other issue is what's if the conservatives come in? Their
Yeah,
Pierre's probably has already come in with this whole you've got to build housing to municipalities to even get more money. So first
yeah,
build
that's a
all
bit
this housing
backwards.
around transit that doesn't exist, and then I'll give you the money for the transit. If you're a municipality, what is your incentive to stop the taxation of development?
Well, exactly. I mean, I think the Liberals' plan, the housing accelerator fund, it should have been tied to lowering costs for development charges. Like,
Hmm.
otherwise, you're just cutting checks and throwing money around,
All
basically.
around. Yeah.
Anyhow.
good idea, but yeah, it seemingly is being taken
I
advantage
mean,
of.
yeah, kind of. And listen, I think a lot of this was driven by, again, a lot of these housing advocates that think, fourplexes are going to solve all our housing problems.
Mhm.
And it's not really. Like, it's not that simple, quite
I mean,
obviously.
I do think that we need to get away from cities that are just all like concrete towers everywhere. I mean, John, I know you're a big proponent of how do we build sort of family-sized housing again, but
Yeah.
I don't know. I mean, I don't know. Some of these things, it's like, well, what's the answer? And it's like, I don't know if there is an answer here. I think it's like it's
I mean, there are, but I mean, listen, I mean, you go more density, but there's a lot of frictions to that too. Like, it's easier said than done. You know what I mean? Like, at the end of the day, politicians also want to get reelected. You know what I mean? And they are, to some extent, not don't want to do what is politically unpopular, like allowing eight plexes in everyone's neighborhood. Like, I don't see that happening anytime soon. Like, I know, and I think that the YIMBY movement would love that, but I don't know if like a provincial politician or anyone's going to do that anytime soon in the GTA.
I'm
So
glad I'm not a politician. For
What?
real.
You wouldn't be digging your own tunnel under
Oh
a
my
major
gosh.
highway
I don't know. I don't
with
know.
your
I just
own
think
backhoe?
housing is so far gone. I don't know.
Yeah.
I don't know how it gets fixed, but
Yeah, it's a
the market will figure it out.
definition of a pernicious product. Will it though? Because we
I
don't
don't
let
know.
the market operate
Well, that's true. We don't let the
really.
market operate, so maybe it won't figure it out after.
No.
No.
All right. So that means everybody has to keep watching and listening to us. We've not solved the housing crisis, but we will keep evaluating the latest ideas and market changes that occur. Thank you so much, Steve and John. As always, thank you to all our viewers and listeners. And we will be back with you next month with our roundtable, and we'll be back with you next week at Move Smartly with a new episode.